Hey guys, this is Cat's Meow Trading coming back at you with another TA. I'm just going to give you a heads up right now. This one's going to be pretty similar to the one I posted 2 weeks ago. So I'll leave a link up there so you can check that one out if you want more in-depth analysis on what's going on with the indicators. You can check that one out, and I walk through it a lot more. This one, we're dealing with a lot of the same indicator signals. Overall, I'm pretty bearish, but we're seeing a lot of the signals that we saw 2 weeks ago starting to play out now. So I'm going to kind of skim over those and give you an update on what's going on with those indicators, but I'm not really going to go in depth with them. And we're also playing with the same supports and resistances we did from 2 weeks ago. So we're probably only going to go briefly over that. So if you want the real in-depth technical analysis, go check out that video. If you just want an update and want to know what my play is this week, then this will probably be the video for you. And like I said, we're looking pretty bearish. I'm definitely thinking I'm going to go in on some puts this week. I am going to be kind of picky about my entry though, because we are still dealing with that wall of resistance or support below us. But after that, the support definitely diminishes. So I'm expecting if we get below a certain point, we're going to see almost like a slip and fall in the market. Or if it goes down like another $3, it's going to slip $10 pretty quickly. So let's get into it. Okay, so starting with the news, as always, we got 3 bits of notable news here that we need to go over. 10 states and cities are now pausing or even reversing their reopenings because nobody takes it seriously and we can't have nice things. It's infuriating when I go out. I see a lot of people, they're wearing masks, but they don't cover their nose, which a lot of medical personnel will tell you that's essentially like wearing your underwear with your dick out. There's just no point. So we're seeing spikes in coronavirus cases. Pretty much nationwide. Right now, we're looking at about 2.5 million confirmed cases with about 127,000 deaths. I think it's very likely we'll see at least 250,000 deaths before this is all over with, unless somebody comes out with a vaccine within the next couple weeks, which I think is pretty unlikely. The last bit of notable news I saw is that the Federal Reserve is going to cap bank dividend payments after completing a stress test. If you're holding a lot of stock in the finance industry, I would probably look for an exit. I think there's going to be a pretty serious rout. Nobody is going to want to hold bank stocks long term if they're going to expect dividend payments to continue to get cut. So that's it for the news. Let's get into the actual TA. So starting off in the weekly, we're going to give you the quick version of this because, like I said, most of this I went over in my technical analysis from 2 weeks ago, and we're essentially playing off that same trend. We've been expecting a fairly long-term bearish reversal for a while now, and the kind of precursor to the trend we were hoping for was a reversal on the KDJ, which would kind of, we were hoping, agree with the MACD, and that actually happened. The KDGA is diverging downwards. It's still overbought right now, and the MACD is converging along with the KDJ, as well as the net volume is pretty bearish, negative about 500 million, somewhere around there. So we have 3 indicators all in the weekly, all agreeing here, which means that on the weekly interval, at least, we can expect a little bit of bearish movement for a while. Moving to the daily, there's not too much to write home about. We seem to have a medium-term bearish trend kind of warming up here. The KDJ has started to diverge downward pretty seriously, and it hit that 300 support. We hit that probably on Friday. That it's a very strong support. The reason why 2 weeks ago I was looking for such an ideal entry, I wouldn't settle for like anything below 312, and I ended up buying puts at 314, was because at 300 the support was so significant. I really didn't see us dropping below 300 in the short term. So the KDJ has some clean divergence downwards. The MACD is kind of weak signals. It looks like a lot of signal noise. I would be prepared for a whipsaw upwards occasionally. I don't think we're going to see above 314 again anytime soon unless there's some significant news catalyst. So I would settle for, again, looking for an entry above 308. My ideal one would be 312, 313. And you have to understand, when I say I want an ideal entry, I give it about a 60% chance I get that entry. The minimum entry I would take is above 308, just because once I stop out, I don't go into a position again. So even if I'm right in the long term, if I don't find the entry I want, there's a chance I could just take a losing trade, which I don't want to do. And for that stop, I'll probably be using the average true range to determine it. Net volume was fairly bearish, 158 million. So again, we've got 3 indicators all agreeing on the daily. Let's go to the 1 hour. Looking at the 1 hour, it seems like we're actually looking at a potential reversal soon, which happens so often in bear trends. I hate posting technical analysis that feel almost identical to a technical analysis I post before. And a lot of the times during these bear trends, we see the bearish movement, end of week, and just a little bit of a bull trap early week, which is what it looks like here. And I hate posting like sounding like a broken record, because almost every bear trend we have seen in the last few weeks has looked like this, where we have an early week bull trap and then we sink lower in the long term. But that's what it looks like to be here. And I mean, I'm hoping we don't open up too bearish. The weight of these long-term trends might just crush any potential reversal on the hourly. That's entirely a possibility here. But like I said, I'm going to be picky with my entry. The alternative way to play this is a theta play. You can do a call credit spread here. You'd have to be less picky with your entry. You wouldn't have to wait till like 308. You could just sell your call credit spread something like 316 and 320. Because I don't think we're going to see 316 or 320, and then just rely on theta to work out that position for you instead of waiting for an entry like I am. But I think there is enough momentum here to do a directional play, and I think if you can make a directional play, you can always make a theta play. So if you are a little bit more impatient with your entries, theta plays work here. If you're patient and you don't want to cap your potential profit, then just wait. Wait to see what Monday and Tuesday look like, see if you can find an entry, and then pick up some puts. So finally, let's take a look at the volume profile, figure out what's going on. So you can see we have worked our way largely through the significant support here, which I was worried about it ever getting through. And under that, there's less support. So early on, what I was talking about with the potential for a slip and fall, that's what I'm talking about. If we get under 300, we've worked our way through the most significant supports, and then those become resistances. So we could even see a possible 285. Now, this whole volume profile was mapped prior to the Federal Reserve printing almost like, what are they up to, $7 trillion or something like that. So unfortunately, with that, the floor moves up. I would probably temper my expectations of any bear trend just based on the movement of UUP, and UUP has moved downwards of about 4%. So we are expecting inflation to affect our supports and resistances by somewhere around 4%. If I do take an entry at 308, I will probably have my target take profit at around 300. I'll put in stops to lock in profit. And you can see with the PPS volume profile, we're over the last kind of 3 upward movements, we've almost seen a perfect convergent wave pattern. What that means is we have a big wave up, a smaller wave up, even smaller wave up, till finally it converges and breaks out one way or another. And the assumption at this point is this breakout is probably going to be bearish. There's no way to know for sure. Just the weight of the long-term trends leads me to believe that this breakout will be bearish. So just kind of expect a little bit of sideways movement while it finally breaks this 300 support, and be picky about your entries, because you really don't want to be sitting on a mediocre entry while it whipsaws in between like a 300 to 307 range. You'll just be looking at red one day and green the other, whereas if you just hold out for your ideal entry, you can just look at green the entire time and then just stop out when it starts to get uncomfortable. Hey, everybody who sticks around to the end, you're my hero. So I think my final decision here is I'm going to be looking to take this position at 311 or above. I think the risk of whipsaw is enough to justify being pretty conservative, and I'm going to stop out if it gets above 315, because at that point I'm, accepting that I'm wrong about the bearish movement. We shouldn't see a higher high than we saw the week prior to last week, if I'm right about this. So 311 is a comfortable entry. If it gets above 314, 315, we'll stop out. At that point it doesn't hurt all that much. And as far as strikes and expiries, I'm looking for an expiry probably at least a month out. And as always, I'm not looking to actually exercise these. I'm just looking to collect the difference in premium. And as far as when to take profit, I'd like to lock in profits with a stop at 308 or below, and then kind of trail the market after that. And if we get below 300, that will be butter for us, because we're expecting the market to slip at least like another $10 if it gets below that very significant support. And after it gets below that support is just going to play as resistance. So it's going to be a very significant resistance at 300 if we get below it. Now we're going to have to temper our expectations, because normally we would expect a drop to like 285. But the Federal Reserve has printed so much money, it's essentially driving the floor up continually. So we're just going to play it careful by moving our stop loss with the market and just locking in profits. There's no guarantee I'll get this position, but it pays to be careful. Most of my plays I've published on YouTube have been profitable for that reason. I've just been careful about where I take profit and where I take my entries. If you like any of the charts I use TradingView and Webull. There are referral links in the description down below. If you use those, you're fucking awesome. All right, so I will see you next week for sure. I'm working on a video with more advanced option strategies like call credit spreads, so you can expect that on Monday or Tuesday. If you want to be notified as soon as it comes out, just subscribe. It's so easy. All right, thanks for watching.